Welcome, everyone. I'm glad to have you join us today. This is one of the first series of webinars from Scarbrough Consulting, the division of the Scarbrough Group. Today's webinar will specifically address Parcel and Express Services. My name is Geoff Chambers. I'm the Director of Supply Chain Services for Scarbrough Consulting. I've been in the business for 38 years. And I will be your moderator today. I want to thank you for joining us. It means a lot to us, and we do appreciate it. Before we get started, I'd like to address a couple of items, one of which there's a Q&A button that you'll see at the top of your screen. This Q&A button, we obviously want to address all the questions that come in. However, we also recognize there may be some proprietary questions that you'd like to ask on the side. Ultimately, our goal is to get to all the questions at the end of the slide presentation. But if we do not, everyone will receive a copy of the slide presentation, the recording, and we can certainly answer proprietary questions and/or questions that were not addressed during this presentation. We're also very excited to announce that Allison Schroer, who is the Senior Manager of Scarbrough Global Trade Services, which is also part of Scarbrough Consulting, will be delivering some keen insight and knowledge about duty drawback, an often misunderstood topic, on August 24th, which is a week from today at 1 p.m. I would encourage you to visit our website to register. I would also encourage you to follow us on LinkedIn to have the latest webinars as well as industry updates that we put out periodically. Following the quest of our founders in 1984, along with our current president and COO, all of Scarbrough Group's webinars are part of a continuing education program to bring our customers knowledge, equip you with the key tools needed in today's industry, and to discuss a diverse range of topics that are indicative of today's global and domestic marketplace. Thank you again for joining us today, and we'll go ahead and get started with slide 1 on parcel pricing is intentionally confusing. 2023 was a very unique year. Post-pandemic, marked the highest GRI for the two parcel giants, FedEx and UPS. This historic increase not only affected the base rate charges, but also included substantial increases in accessorial charges. Scarbrough is collaborating with AFMS, who is an industry leader in parcel and express services and negotiations, and the overall impact of the changes to bring clarity on how they will have a bearing on your parcel and express expenditures, both now and in the future. So I'm very excited and pleased to be working with AFMS. I'd like to introduce Mike Erickson, who is the CEO and president of AFMS with over 31 years of industry experience. Mike, good afternoon.
Hey, thanks, Geoff. We're excited to be here and present to some of your folks here about what's really going on in the market and related to parcel. So we're excited to be a part of this webinar today. Thank you.
And Derek Bealby, who is vice president, joining us today with AFMS with over 14 years of experience. Derek, good afternoon.
Good afternoon, Geoff and team. Thank you for joining us.
Pleasure. Let's move into slide number 3, and maybe you can hit on the highlights, Mike, of some of your global clients and why you are the industry leader in parcel and express services.
Sure. Yeah, as you can see, there's a lot of well-known brands here on the screen today, and a lot of these companies are all large users of UPS, FedEx, DHL globally and here in North America. And all these have one thing in common, besides being a parcel shippers. They all use AFMS to help them negotiate some of their best contracts when it comes to parcel. So, and you look up there, you may even see someone like right below Best Buy, like an XPO, or you even see the U.S. Postal Service. They have hired us to go through and do work for them on consulting on pricing and their contracts and some of their analytics, as well as the big brands you see there. So we're excited to, we've got a lot of knowledge, a lot of background. I know in a couple slides we'll tell more about our company, but this is just a lot of the clients we have helped over the years.
Great. Thank you, Mike. Let's move into slide number 4. And we're going to go over this general rate increase, and it's what appears to be what you see on your screen. But Derek, if I was a key decision maker signing a new agreement with this general rate increase of 2023, it appears whether it's FedEx or UPS, it would be 6.9% increase. So if I were, let's say, a CFO or a CEO or a logistics manager, I historically would say, okay, I paid $10 per piece last year. This is my average zone. I just need to add 6.9% general rate increase to come up with my forecast for 2023. And would you please elaborate on that and why that's a little bit askew?
Sure. Thanks, Geoff, for that question. Certainly when you look at this slide, super easy for a CFO, a sophisticated purchasing person, a logistics director to look at this and say, hey, I can budget. And I think most of us joining this call today know we are in budget season for 2024. So when we look at historical rate increases for UPS, FedEx, DHL, they all seem to mirror each other pretty consistently. And this is a top line number, 6.9%. So if you see the press releases, you go to the carrier's website, you talk to your dedicated account rep from the carrier, you'll hear 6.9%. And a really astute and smart negotiator of a parcel pricing contract likely has had the opportunity to maybe negotiate better than a 6.9% rate cap on an annual basis. And that would effectively make potentially your rate cap less than 6.9% and very unique to your specific contract. Now, with that said, this is only one part of the picture. The real picture, when you dig beneath the surface, is that 6.9% is only for the services. And when we say the services, think about next day air, 2-day air, ground residential. Those are referred to as the services. So those are on average going up 6.9%. If you dig deeper, that's only a part of the overall pricing equation for a total cost to package. Accessorials are a big part of that. Those are definitely not going up 6.9%. It's a lot higher than that. It was higher in 2023, and we expect it to be even higher than that in 2024.
So that takes us, thank you, Derek. That takes us into our next slide with respect to what you said about other services and or accessorial charges. Mike, would you like to elaborate on some of these hard-hitting accessorial charges that are somewhat veiled in a normal UPS FedEx contract?
Yeah, and there's over 100 accessorial or surcharges that UPS and both UPS and FedEx have imposed on shippers out there across America, across Europe, everywhere, from fuel surcharges, Saturday delivery, residential fee, oversized charges, DAS, which is called Delivery Area Surcharge, based on the zip code you're shipping to. So all of these are a big part of your costs when you're shipping UPS and FedEx. In fact, the 6.9% rate increase you saw that Derek mentioned, that's on the base charge from moving a package from A to B. They layer on these extra accessorial charges based on you using them. If you don't use the Saturday delivery charge, you're not going to get the $15 charge, but it's negotiable. But every year they keep raising these rates, and 2023 was probably the largest year we have ever seen collectively on all the accessorials. They're up almost 12% on average everywhere. So you couple that with your 6.9%, a lot of shippers are scratching their head and saying, why are my charges so much higher? I negotiated a new contract. I got really good discounts on my ground commercial or my air shipping, but they didn't pay attention to the accessorials. And these represent 45% of your parcel bill now. So you can see on the right, the increase in a lot of these here, and just simple examples like the residential fee. If you ship a lot of residential packages as a shipper, they're up 10.4% for ground. So those are the ones just going to metropolitan areas. So that 530 used to be 470 or something before. So they're going up quite a bit. And this is a good example of what's happening out there behind the scenes. And the reason that Derek and I are really excited to talk about this stuff, that we used to all work for UPS and FedEx and DHL. Our whole company, AFMS, is all from the carrier. So we really know the inner workings of how these new prices and the accessorials affect shippers because of our backgrounds working at UPS and FedEx.
Excellent. Thank you, Mike. And correct me if I'm wrong, but in 2023, I know that there's an average of 41,000 zip codes in the United States. Under the 2023 delivery area surcharge, over 25,000 now are considered to be with an extended surcharge applied as well. Is that correct?
Yep. Yeah, UPS and FedEx have been, we collect this little quietly every year, and maybe even mid-year. They don't wait till January. They look at, if you're shipping to, just use an example of like either Eastern Montana or Eastern Oregon, more rural parts of the country here, those zip codes, of those 41,000 zip codes, they get the big zip codes in New York City and Los Angeles, San Francisco, Seattle, and and Dallas. But when you get outside the major metropolitan areas, the zip codes that are further out, a little harder to get, they've over the last 5-10 years have been taking zip codes away from the metro areas and added them to this thing called DAS, Delivery Area Surcharge Zip Codes. So now, like Geoff mentioned, there's 25,000 zip codes where you're going to get either a $5 or a $12 charge if you ship to those zip codes. A lot of companies don't know this, but it used to be they were all no charge. Then they added DAS about 10 years ago, the delivery surcharge to certain zip codes. Now they got extended DAS, which are more of the remote, not just Alaska. We're talking in the North America here. There are zip codes that are getting $12 for delivering a box there. And the good thing is those are negotiable. So all these accessories you see on the screen here are negotiable. And that's all those clients you saw earlier. We help them figure out what is negotiable. And we'll talk more about that later. But these are all, it's important to pay attention to this stuff here.
Yeah, exactly. And with respect to fuel, I noticed from 2022 to 2023, jet fuel went up 125%. A lot of the fuel surcharges for UPS, FedEx were up over 300% as a percent of change, and which is another big number as far as fuel surcharges. So another accessorial that I'm sure that you'll both agree is a negotiable item.
Absolutely.
Great. Keeping that in mind, I'd like to go into the next slide and talk about really some best-in-class key components for our customers that are listening today and those who attend in the future when we upload this on our website. What are some of the key components for best-in-class components?
Well, getting a best-in-class contract can be complicated. A lot of companies don't do the due diligence and the research to figure out where the market is, what discounts are you potentially eligible for, because benchmarking data is hard to get. It's not publicly available. It's really, it's a very difficult thing to get, at least on parcel. Maybe ocean container rates that is available through different groups, but parcel is really limited. The nice thing is we do have access to a lot of companies' data. We have over 3,000 clients. But before you can figure out how to get best-in-class contracts, on the very bottom, you'll see the how to get your data box. We circled it. Both
Right.
UPS and FedEx have a billing center, and they store a year's worth of your data. All the data is there. And you need to gather that data, get 1 to 3 months of your data, look at all those accessorials we talked about, how many shipments are going to remote zip codes, how many are going to Saturday delivery, how many are going to a residential versus commercial address. All that data is available online, and it's every customer, a UPS and FedEx, has access to that data. They store it for 1 year for you. So we always tell people the first step in this map to success is get your data. Look at the how many shipments are going to the different accessorials. Where's your spend? Is it commercial ground, residential ground? Is it air? Look at all the data. Review your contract for all the T's and C's. Are there termination clauses? Or do you have rebates? Derek mentioned rate caps for the rate increases each year. Do you have any of those? All that is critical. So we like to analyze the data for our clients. We help them do the benchmarking. We'll figure out exactly based on if you're a retailer or electronics or a healthcare company, what is the average discounts based on someone spending 10 million or 2 million or 100 million? Well, we have access to a lot of contracts, a lot of data, and we can certainly help any company figure out the benchmarks. That's what we pride ourselves on. And then once you get all that data, you really want to put together a strategy and the right plan to go back to a FedEx or UPS and present to them why your case should be to get better discounts. And you really got to present this the right way. Their FedEx and UPS are good negotiators. The sales team's been trained to not give away discounts, tell people you have the best rates. So you need to present a really good argument to the pricing teams at FedEx and UPS, and you want to do this correctly. So I always tell people, don't go in and ask for 100% on fuel discounts when Amazon and Walmart don't get 100% on fuel. They'll laugh at you.
Sure.
So you got to be really accurate in your benchmarking and what you're asking for in your assessment. But this is some of the, and we're going to share this whole slide with you guys after the presentation. But by following this little slide here, this is what we think is the right roadmap to getting a really good contract with the carriers.
Great. And as far as analytics, one of the drivers, one of the KPIs that I keep reading about, and I'm sure you have as well, is that high level of visibility. So the reporting, is paramount in really understanding your forecasting, your spend, right down to that DOS that you mentioned before.
Yep. Yeah, this is important to manage and maintain good watching what's going on. A lot of mistakes happen both with your invoicing. They overcharge you by accident. They may bill you for things that aren't yours. There would be duplicates. Maybe you're shipping to different areas of the country you didn't know you were. Maybe you got bad addresses that you didn't know about, but there are all kinds of reports that you have access to that we provide clients to help manage their parcel contracts and their shipping patterns and what you're doing. Are you maximizing your contract by how you're using your carriers? All that is really nice, and a lot of our clients love using the reports to help manage their day-to-day operations with the shipping reports that we provide.
Absolutely. Thank you, Mike. Let's go on to the next slide and let's talk a little bit about benchmarking. Can you
Derek, want to talk about this one?
Yeah.
I will.
Derek?
Yeah, perfect. Thanks, Geoff. Thank you, Mike. I think Mike hit on a number of factors that we look at as an advisory consulting firm. And I think, Mike, as you've mentioned here, is our entire organization's background is coming directly from working at UPS, FedEx, DHL. We have offices in Canada, offices in Europe also. So we are able to effectively look at customer contracts on a global scale and identify what is current market rates. Now, the reality is all customers negotiate their contracts at any point in time, and these contracts can be multiple years. The status quo for UPS and FedEx are 3 year contracts. And when we think about LTL market, those are typically 1, maybe 2 years. So you're at the negotiating table effectively by the structure of UPS and FedEx at a much lower rate than you would be for ocean contracts and LTL contracts. Now, what that means is having benchmarking at your fingertips to have the answers to the test questions when you're sitting down with UPS and going over where should my contract be is going to put you in a much more successful position today and at any point in time within that contract to amend it or renegotiate. So here on the screen, this is a sample of a UPS and FedEx customer base. So we're referring to these as shipper A, shipper B, shipper C. We sign NDAs with all of our customers. We do not share our customers' data with anyone, but because we have the repository of information at our fingertips at any point of the day, we can draw upon 3,000 active UPS and FedEx contracts and be able to talk to any size customer. So we have customers that spend $500,000 a year in parcel and some that spend over $300 million a year. So we have equal profiles, comparable distribution points, origin destinations, comparable package characteristics, residential, high dimensional package, or maybe commercial overnight 10:30 a.m. delivery. We have all those rates, the bells and the features in those contracts. So we can present and do every day of the week a sample comparison here of where your contract rates amongst companies that are like characteristic, like mind, who have active pricing in the marketplace. And now we're going to be able to see, are there any deltas from their contracts to your contracts? And that from a customer perspective allows you to not go to the market and test the market and find out afterwards maybe you don't have the best pricing. You can get effectively pre-bid analytics and analysis from us before you even go to the marketplace. So like I said before, having the answers to the test question builds expectation and also credibility when you're going to UPS and FedEx to renegotiate your contract.
Excellent. Thank you, Derek. To your point, where we've seen, and we just finished a contract that was had a buyout clause. So let's say that, you signed a 3-year contract, you're into it 18 months, and you decide you want to put it out for bid. Both the UPS and FedEx historically use some sort of buyout language. Have you seen that actually implemented? Or is that normally waived if you try to cut the contract before that 3-year agreement?
We haven't seen a lot of enforcement of that. They may put that out there to scare you, but yeah. Of all our clients over the years recently, I don't see them coming back and saying, "Hey, you're switching carriers," or "We're going to penalize you." They just put that in more as a fear tactic, just like they say certain things in the contract that penalties that there's a lot of I guess the roar of the lion scares people more than the bite of the lion. So, I mean, they don't really do much about it. They just try to scare you and make you stay with them. But every contract has a 30-day out clause. In the bottom of your agreement, it says either party, and the words are either party with 30 days notice may change or cancel this agreement. So at any point in your contract, you can literally change, do an addendum. If we find out through an analysis that they're only getting 30-40% of this example on the screen, and everybody should be getting 49, 48, 60, and you're only at the 30s or 40s, you can go back to UPS mid-contract and ask for a pricing addendum and fix it without any penalties. So we always tell people, I'd say half our clients do amendments or addendums to their existing contracts and don't do a full-blown RFP.
Yeah.
Perfect. All right, let's go into our next slide and talk a little bit about the benchmark savings report. And Derek, maybe you can bring some highlights to that.
Yeah, that's great. So as Mike mentioned earlier, a couple slides ago, the data brings everything to life. UPS and FedEx have very comparable CSV-based files. Everything starts from there. Every customer has access to their data, whether it's through username and password, where you could pull it up today, download the report, or contacting FedEx and UPS rep, and they will pull it for you and send it to you for a certain time frame. How we look at our customers is over a multi-month or even up to a year's worth of data. And what you have in front of here is the summation of a 40-page findings report that AFMS generates at no cost to all of our potential customers after we receive all of that CSV data. So as you can imagine, that CSV data, if you haven't seen it, has about 250 columns of information in there, all about every single shipment that you've shipped. So that allows us throughout that findings report to create the savings targets after we do the benchmarking. So like I mentioned in the previous slide, there's going to be a delta between where the market has said the pricing is and your contract as it sits today. Now, in these UPS and FedEx contracts, everything is negotiable. I cannot emphasize that anymore. Negotiate, negotiate, negotiate. Now, how much can you negotiate is the real question. So answers to the test question. So what we do for all of our customers is we want to show the financial ramifications and the opportunity. So I refer to it as the size of the prize to our potential customers. So this is going to show us where your current shipments are going out today, what the benchmark pricing is, in the target pricing on the right-hand side of the screen that we see in the marketplace today of active live contracts. So these are not pie in the sky. These are real pricing data points that any customer of like size and characteristics can obtain. So the size of the prize here is down at the bottom, the savings opportunity. This is an annual opportunity in which we allow our customers to make a very quick, very data-driven decision based off of what's the opportunity for us to re-engage a conversation with AFMS's support back with UPS and FedEx and seek a new contract, a new amendment. And keep in mind, every contract can be amended, as Mike said. And if you have this information at your fingertips, you're allowing yourself to be able to walk to the negotiating table knowing exactly what the outcome you expect to have. So we're turning the RFP process on its head, and in turn having a direct negotiation where you know where you need to land upon. Very, very different if you've done an RFP and you're trying to understand the market. We are giving you the market information before you even run the numbers.
Very good. Let's go to our next slide. And before we get into the market update, I'd like to ask another question that came to mind. So during COVID, because of the uptick in e-commerce and FedEx and UPS and USPS and really the LTL industry, truckload industry, all industry had difficulties meeting on-time service performance. Now, I noticed in the last contract that we negotiated that there was some verbiage in there that they would not guarantee or provide any guaranteed services any longer. Do you see that going away, Mike? Is that a negotiable item? And why is it still there when we're post-pandemic and we're dealing with a downsized e-commerce?
Yep, that's a good question that should be addressed to UPS and FedEx, but I can tell you our thoughts here. Well, during the COVID, obviously significant volumes were converted to home delivery. The carriers were blowing up the seams. They were getting too much volume. They were telling customers, you're giving us too much. E-commerce was blowing up. So there was so much volume, they had to and they didn't want to be knocking on doors and getting signatures. So they waived all money back guarantees because of a lot of issues out there. And so they waived those all during COVID. Now here we are 8 months with the COVID in the rearview mirror officially, and UPS and FedEx have only reopened money back guarantees for overnight and 2-day delivery. They do not allow money back guarantees on ground, commercial, ground residential, and other services out there. So they're not, and they're not doing that for one reason. In my opinion, it's just my opinion, it's a huge profit center they don't have to give back. It's also a side and a thorn of all the large auditing companies. Those large auditing companies that are out there, their whole bread and butter is on money back guarantees, finding those and recovering them within the 15-day window. By them not allowing that, and most shippers ship ground. By far and large, the majority of all the shipments in America are going ground. So all those packages are not auditable 8 months after COVID. For whatever reason, they're saving all that money from all those auditors that are out there. That's just pure profit in their bottom line, and to me is a little an issue that I think should be addressed, and UPS and FedEx should put that back in play. But they've got financial reasons for not doing that.
Thank you. Derek, maybe you'd like to address some of the market updates with respect to UPS and FedEx.
Yeah, absolutely, Geoff. As I want to describe this before we dig into each example, there is a perfect storm of parcel pricing opportunity presenting itself to every size shipper in the market today. A handful of reasons exist here on this slide, and I think Mike mentioned it. The last few years, COVID, surge in volumes, the carriers did not have to buy the business or new customers because their existing customers were just generating organic growth. So they were winning more, higher densities, not changing contracts. Of course, they did in certain situations, but it wasn't an entire philosophy change in how they went about pricing all of their customers. What is happening today in the market is really eye-opening, and it should be for anyone here on the call who has a contract with these carriers. This is the time to dig in and assess. August 8th, UPS Q2 2023 earnings report, revenue down 11%, profit down 21% year over year. All of these items are going to the negative. Revenue per piece, volume, revenue per stop, density per stop. These are all items in a big behemoth, a 400,000 employee company, UPS. They can't sustain a declining volume in their system while they have a cost structure that is always increasing. One of the items is the Teamster negotiation that just finished over the last few weeks. And coming into July, we had customers contingency planning nonstop for the last 3 to 6 months. They were moving packages away from UPS starting in June, continued into July, and they haven't turned those packages back on to UPS. UPS clearly is articulating in the market and directly to each of those customers today that they will buy the business back from FedEx. So it is so key right now that this is a perfect opportunity to utilize things happening in that market. Volume is down nationally, Teamster negotiation, UPS has lost business, and that's a UPS side. Well, FedEx is seeing the same impacts of a volume decrease, but just organic volume decrease over the last 12 months. They have a new CEO last June 2022, very finance driven, has had very, very specific targets to go out and get UPS customers, but also is putting themselves in a position that they need to go buy a lot of business today. So what we're really seeing is this is a perfect opportunity to be able to negotiate a contract, especially one that you've done in the last 12 months because of the market conditions.
And I'm going to add a couple of things to Geoff and Derek, but even I was just talking to one of the regional vice presidents here, and there's a lot of regional carriers out there, from On Track, Laser Ship, they merged together, and a lot of other ones. And talking with one of the folks just like yesterday, they had that volume that was converted them for fears of the UPS strike has not been diminished. It's still there. So there's a lot of UPS volume that is now resting with regional carriers, the post office, as well as their competitor FedEx. So, the carriers are going to want to get that business back. They really expanded their networks during COVID. Extra trucks, drivers, they really expanded it. They didn't expect this downplay in the economy and what's going on with the consumer spending's down, which means people aren't buying things online, e-commerce shipping's down. So their volumes are down across the board, and they're trying to keep their networks full. Like Derek said, it is a high cost to keep those networks operating, so they want to keep the packages filled. And so you're right, Derek, this is an excellent time to do the right benchmarking, figure out where the market is, and go in with a well thought out plan to get the most out of a new contract with a FedEx or UPS. The timing could be better right now.
Yeah, totally agree. Going on to the next slide, we'll kind of finish up here so we can get into questions. So the bottom line, Derek, maybe you can get a high-level overview of the bottom line and really giving our customers the ammunition when they're working on their KPIs internally with respect to Parcel and Express.
Yeah, thanks, Geoff. Yeah, so really, when we look at the opportunity in front of us, the data, where to go find it that we've talked about today, and the available benchmarking that a company like AFMS can deliver to you, I just say it's a call to action internally at your individual organization. Sit down with finance, logistics, get the right people together and say, hey, this is an opportunity to at least assess where are you sitting in the marketplace in your contract. How AFMS takes an approach to this conversation is total discovery. So no commitments. We are looking out for best interests of our customers, and we work off a contingency-based plan in which AFMS is completely aligned financially. Your success is our success. So with that said, there is a kind of a no-brainer look at how to move away from this conversation and go back to your offices and say, hey, if we had a benchmark and it proved to have 5, 10, 15% opportunity, why would we not take action on that here today? And the critical thing is everything's negotiable. Even the most sophisticated customers, as we've shown here, the Starbucks of the world, the McKessons of the world, they hire outside advisory firms to support their procurement efforts because no customer can have all the answers to the test questions. So seek outside advice, and then if it turns to an opportunity, we'll arm you with all the right bits of information about how to go get it. We'll support you along the way to make sure that that new pricing gets put into place.
Great. Well, thank you, Mike and Derek. Thank you, everyone, for joining us. If we go to our final slide here, I'd like to open up any questions that our audience has today that can be addressed by Derek or Mike. And I'd like to open up that now. Again, I want to stress to you that there'll be a follow-up email along with the slide presentation. Should you have proprietary questions or questions that we don't get to today, we will certainly respond accordingly to everyone that's registered. And our marketing team will let in the questions. If there are any out there.
While we're waiting for those, Geoff, maybe I know one question that we get commonly asked is, when is the right time to negotiate? And when's the worst time? And we tell people, the best time is really the spring and summer. Don't wait till October, November, December when the carriers are the busiest. That's the worst time. They don't give you much attention. They've already built their costing models for what they expect their budgets to be, where they've already got a lot of things already pre-planned. Really the best time is starting in not January, coincidentally. You really want to do it in late February, March, all the way till end of August or September. Those are really the best times to really jump into this process and review your contracts.
Do you see, I know that one thing that we didn't really talk about was peak surcharge. I know that FedEx had one that was, I think it's still going on, to my knowledge, from the beginning of the year, which historically is during peak season, not necessarily off season. Do you still see that as an issue in most contracts?
Yep, it's still out there right now.
Yeah,
FedEx and UPS almost mirrored each other, where they look at your February volume and they sort of assess that for if you grow more than 20%, 50%, there's penalties, and they penalize you 3, 5, 7%. So it's really it's a real sliding scale based on your volumes in February. Those penalties are still out there, and you're right. It's 8 months after COVID, yet those peak season charges really have moved into almost like COVID charges. So there's a lot of changes going on that the carriers realize this is a real money making opportunity. Let's not let this go away. Let's relabel it. So they've been relabeling it, these COVID peak season charges, and it used to be 1 month. Now it's 6 months.
I remember the days of 1 month.
Yeah, so it's changed, and those things are all negotiable. You could tell the carriers, I'm not accepting this. I only want to do this for the 1 or 2 months, but you're not getting me dinged for 6 months. So that's an excellent question, but that's all in that 40-page fine print, double-sided contract with UPS and FedEx. You really have to get on your reader glasses to really dig into this and figure out where the problems are with these contracts. It's really complicated. And like the first slide said, parcel pricing is intentionally confusing by the carriers. And we know that because we all work for FedEx and UPS.
Well, and it's funny because I remember being in the industry as long as I have, the days of the 5-page FedEx UPS contract. And the last one that we did was 35 pages. So, things have certainly become more convoluted. I do agree with your assessment, both of you, on this being an opportune time to really to draw in all departments. I think, Derek, you mentioned that, because everything that we're talking about, from everything from cost containment to supply chain modeling, is indicative of a holistic approach. And you can bring all those departments in to really assess where your KPIs need to be and where you need to be in the market. So totally agree with you on this being a very, very opportune time.
I was talking to a client recently, and they said that this parcel contract negotiations they went through a year ago was the most complicated and confusing, more than trucking, more than ocean freight, more than international air freight. This one area made them pull their hair out more than any other category, and they were the procurement director for all modes of transportation. So parcel is pretty challenging. If you don't get it right, you could cost yourself millions of dollars.
Yeah, especially if you look at, just an average GRI and try to calculate that or forecast that 6.9% that they took this year, and try to forecast that for the rest of the year, and then only to find out in third quarter that your price per piece has gone up more, like you said earlier, Mike, 12% versus the 6.9%. So what do you foresee? We don't have any questions right now. So what do you foresee, Mike, Derek, either one or both? What do you see as far as in moving forward in 2024, UPS's current situation with their $30 billion new money on the table to pay out this contract to get the UPS Teamsters where they need to be, with FedEx and their over purchase of airplanes and the things that they're doing now to tweaked down the number of people. They've had extensive layoff, terminal shutdowns. What do you anticipate for 2024 as far as general rate increase, as far as the rate base itself? And do you see accessorials continuing to climb?
Yeah, I think more of the same is the theme. They're going to have to cover the cost of all the higher labor cost contract they just got. You're right, FedEx is trying to merge their ground and air operation, which is going to be highly expensive to do. I mean, this is a big change in all their networks and what they're doing. So on both carriers, they've got some huge cost factors that are going to go in the equation here. And those will be probably released here in late October like they always do. So in the next month or two, right now, the finance teams are figuring out what should these rate increases be. They release them just around Halloween, the scary time of the year. And so shippers will get a real eye awakening when it comes to October 31st, when they around there when they release it. But I expect more of the same. This was a record one in and we tracked this. This was the largest rate increase in the history of UPS or FedEx this last year, 2023. I expect it to be the same or bigger just because of what's going on with the lack of volume. The revenue's not there to help cover the cost of all these new things they're doing.
Right.
So I think the big message from today is shippers beware. Who knows what's going to happen, but I'm expecting more of the same, and some big increases are going to hurt everybody's budgets out there.
Absolutely. Derek, what are your thoughts? I know that when I first started in the industry, there were 100 startup companies. Remember the old RPS? There are 100 startup companies that tried to compete in the parcel marketplace. Of course, emerged really two giants. And now we have a kind of a hit and miss regional parcel network now. Do you see that, Derek, growing in the future? Do you see it as a possible negotiating tool to, with UPS or FedEx in the harmonics of all of this?
Yeah, I think it's a great question. There's a lot of legs there that we could take this. I think at a high level, you're absolutely right. There's a duopoly in the U.S. parcel marketplace for non-USPS size parcels. Very, very clear. Certainly, if we go back to the acquisitions, FedEx of RPS, as you mentioned, but just look at DHL. DHL had all the money, all the backing. They came into the U.S. marketplace in the early 2000s with all the money that was already invested into Airborne Express. They had a network in the United States, and they failed. DHL failed very miserably after making massive investments. So when you look at it, the barriers to entry in the U.S. marketplace are almost insurmountable. There's been many regional parcel carriers that have come and gone, and there are a handful that are credible, but consolidation in that industry, regional parcels, has been happening over the last several years. LaserShip, one of the regional parcels, large one in the southeastern United States, they have acquired OnTrack, which is the largest regional parcel company in the West Coast. That combined venture now has 30 states that they have service to and from. So when you start to look at it, the consolidation efforts are just going to continue. So it doesn't seem like there will be more regional, small, New England size, 3, 4, 5 states offering out there. But you'll have to continue to look for maybe those emerging carriers in the marketplace. Now, on the heels of saying emerging carriers, someone everyone here should know about is Amazon. Prior to COVID, Amazon was launching their own delivery network. You did not have to be a customer using the business service end or their warehouses to have Amazon ship your packages. They, in the last couple weeks on their website and individual customer targets, are putting out there that they are, in fact, going to be offering their delivery model to any customers that fit their criteria. So if you go on Amazon.com today, you can actually see some criteria, submit data. It looks like they'll set up some time to talk to you, but based off of our customer base, we get to see what Amazon is actually putting in the marketplace. So they are in fact targeting large specific customers that fit their product need and their volume need, and they are going to give UPS and FedEx a true run for their money because of the size, scope, and backing that they have. And they've operated at a financial loss for years, and clearly they're $1 trillion market cap company. They'll be able to sustain some headwinds, and I think they will be kind of a third-headed monster.
Yeah, totally agree. Do you think, I know that UPS had a specific, the last I heard it was around 20% of volume that they had was attributed to Amazon. Do you see that relationship continuing into 2024 or being augmented based on Amazon's new offerings?
Well, that's a good question. I mean, FedEx obviously had a falling out with Amazon a few years ago,
Right.
based on cost models and pricing and some other and competitiveness. And you know, I this is just our own personal opinion, but I really believe that relationship could have a similar fate. But you just don't know if they start going in and jumping into and taking some UPS accounts from them, and that happens numerous times, and UPS loses $20 million, $50 million accounts here and there. That relationship probably won't last either.
Yeah, agree. I don't see any questions from our audience.
Actually, Geoff, I am in the Q&A. I think I see one in there from an Evan.
Okay, great.
I'll say it out loud so everyone can hear it. So Evan asked the question: how does UPS or FedEx react when they find out one of their customers has retained your services? So I assume your services, AFMS services, as a kind of a third-party consultant negotiator. I'll take that, Mike, if that's okay. AFMS has been in business for 32 years. Mike here actually started this industry. So we have tremendous experience on the UPS FedEx relationship in response to customers and how to go about handling the relationships for the customer and UPS directly. So prior to 2009, believe it or not, UPS and FedEx used to call AFMS and say, hey, we'd love to partner up on some customers. In 2009, UPS and FedEx took a different stance. They only want to talk directly to their customers. We totally respect that, and so does our entire industry. So since September of 2009, so 14 years, we have 100% operated in the background for every one of our customers. It's preferred for us, it's preferred for our customers, and it's preferred certainly for UPS and FedEx. So what we do is about 95% of the work. We create the documents, we actually ghostwrite the communications that go to the carriers, but our customers actually copy and paste that information and put it into their own email and send it off to the UPS and FedEx rep. So in fact, UPS and FedEx never know that AFMS is actually helping you, the customer, get your information together, do the assessment, write the communication, and then when the contract offer comes in, our customer just forwards us the email. Super easy to do. We do all the assessment, get it back to our customer. So we can, in fact, impact the entire life cycle of a customer's contract term, a 3-year term, and FedEx UPS will never know at any point in time that we, in fact, have helped you surgically remove costs outside of that contract behind the scenes.
And we keep everything confidential. We sign NDAs with our clients, and we have been very proud of the fact that in our 30 years of business, none of our clients have ever been sued by a FedEx or UPS or even legal threats, because we do what's right. We don't share confidential information. We help people do all the correct benchmarking and the strategy, and it's complicated. So people need advice. And And if FedEx UPS want to negotiate in the same room or directly with the clients, no problem. We just help you get to the table and we step aside. So we're there to support you and help you. And it's been a great process, even the way it works today.
Great. Any other questions? And for some reason, I'm not seeing questions on my side, so I apologize.
Well, you've been asking some good questions, Geoff. So probably, so we appreciate the good questions coming from you here. So.
Well, it's you know, we as I said, we had finished up a contract just as you mentioned. As soon as we got involved, we had one meeting with UPS, one meeting with FedEx, and they said, okay, we don't want to deal with these people anymore. However, on a $6 million annualized spend, we were able to do consulting and bring the customer substantial savings just on, navigating. And one of the VP that was originally involved said, because of all the smoke and mirrors, I'm out. So he kind of put the director of operations in and said, okay, you handle it from here, because there was so much detail. And you're right, back to what you said, Derek, 250 lines wide or columns wide, 10,000 lines long. It's paramount to have the tools and the abilities to quantify what you're looking at on a very granular scale and report that back to the customers, not only to benchmark, but to meet their inherent KPIs that they're working on. Again, I think the key word there is holistically across all departments.
Mm-hmm.
Right.
Well, hopefully this has been a good webinar for users of UPS and FedEx to get a good handle of what's going to market today, why today's a good time, and how to get benchmarking data and strategies. So we're excited to have been a part of this, Geoff. We really appreciate you inviting us to the webinar today.
Well, I want to thank you, Mike and Derek, both for taking time out. All the conversations we've had about our collaboration together. I think all of you who have attended this meeting, again, just a reminder, our own Allison Shore will be up a week from today at 1 p.m. on duty drawback. Please go to our website, follow us on LinkedIn for upcoming webinars. I'm certain that we'll have another Parcel Express webinar here in the coming months, probably toward the first of the year, and looking forward to a long-term relationship with AFMS. So if there's nothing else today, we thank you again for being part of this webinar, and look forward to seeing you next week on duty drawback, and then we'll have essentially one every month that we will send out. So thank you again, Derek, Mike, and everyone in attendance today. We appreciate your business and your support as a service provider.
Yeah,
have a great day.
Thanks.
Have a great day.
Bye-bye.